The whistleblower tells us he feels guilty about the huge bonuses he got by making car buyers pay thousands more in interest. But an industry boss questions whether there even is a scandal. So what has been happening with car financing and who could get compensation? I'm Lucrezia Millerini and this is what you need to know. Hello, today I'm joined by our consumer editor, Chris Choi. Chris, welcome. First of all, in a nutshell, for those of us who don't know, just explain how car financing actually works.
Well, you know how it is. It's one of the biggest purchases of your life, second only to buying a home. So the money involved is immense. I'll give you a couple of early numbers in this podcast. The actual motor finance market is worth £21 billion a year.
Goodness.
We're talking about around 2 million purchases. What tends to happen is there's quite a lot of emotion involved in buying a car. I don't think that's just me. I think generally you end up going onto the forecourt, you see the car you want, you feel desperately you want to get into that car and drive it away.
You fall in love, don't you?
And absolutely. Yeah. And right there will be finance deals available. Really what this whole issue centres on is what degree of obligation to the customer does the dealer have when it comes to these financial transactions, which, as we've already mentioned, are incredibly hefty.
Okay, but just tell us a bit about the backstory now that we're hearing. And this is affecting a lot of people now, isn't it? And many of them are claiming that they've been missold financing loans, and they're saying that it's actually a scandal.
What we're looking at is the group of people that took out motor finance between 2007 and January 2021. Now, the reason that latter date is so important is because that's when the Financial Conduct Authority banned these commissions that are known as discretionary.
Okay.
And that is where it gets very, very interesting and where a lot of people get very angry about what was going on. Because when they talk about discretionary commission, the discretion was in the hands of that car dealer to make the interest rate higher or lower.
Okay.
And there's plenty of evidence that in many, many instances, the way that the car dealer could get the highest commissions was by charging you, the customer, the highest interest rates. So you see there, we have got this incentive really for consumer detriment. That is what the Financial Conduct Authority banned. They reckon that in that whole period from 2007, we're talking about 32 million different loan agreements. So it's a huge thing to get through. And they reckon that nearly all of them, almost around 99% or thereabouts, involved financial agreements and commissions of various types. And when I say various types, I think that's where we're into new ground in what we're talking about today, because we've had an insight into the sheer range and scope of the commissions involved.
And this is the new evidence your exclusive investigation has uncovered. Tell us what you found, because you spoke to a whistleblower as well, didn't you?
Yeah, we spoke to a car dealer who was there on the forecourts, seeing all this going on, finding out what went out in the office. He himself would get these commissions. He says it operated in precisely the way I've outlined, that if you wanted to make the most money, you had to get people signed up to those deals with the higher interest rates. There's a very funny phrase I've heard more than once from car dealers who say there was no money in the metal. In other words, they were not making the bulk of their money from the metal, from selling you the car. It was from the finance. Now, here's what that whistleblower told us, and I should tell you that because he requested anonymity for obvious reasons, his words here are voiced by a member of our team.
So they'd come in expecting not to get finance, so they'd just say yes to the first offer at 17.9% APR, when realistically we could get them 8.9%. So they were paying top whack for something they didn't have to pay top whack for.
Goodness me, top whack. I mean, that's an understatement, isn't it?
Absolutely.
That's a hell of a lot of interest, isn't
and
it?
can you imagine if customer had known any of that
Yeah.
at the time, that there was that range of possible rates.
You'd not have gone for it.
And they were getting the high ones.
Yeah.
So
Not a good deal.
You can see why so many people call it a scandal. But that word is strongly disputed by the industry.
But how does he feel now?
Well, he feels really bad.
Absolutely awful. I was doing it to friends, family, anyone basically. So I feel really guilty now.
He told me that when he's going around the local community, people shouted him in the street.
You've been looking at this, you've been looking at the potential scale of all this. As you said, it's affected so many people potentially, hasn't it? And you've also uncovered internal documents which kind of really show the scale, or potential scale at least.
Yeah, the importance of what we're identifying in terms of the documents is that there's been a very large focus on what's known as the discretionary commissions, these ones that the individual car trader would get, and they would get higher the higher the interest rate goes. But what we've uncovered is quite a network of other commissions. I've got a list of them here. Things like support budgets, advance commissions, volume bonuses, marketing and training support, all kinds of things. To get really under the skin of all this, we spoke to a guy called Sam Ward. He's an investigator for one of the claims firms that's very active in this area. And he told us about what he feels this paperwork reveals.
So what we've actually discovered is that there wasn't just one commission paid. There was sometimes 2, 3, if not 4 commissions paid. It was stacked against the consumer from day one before they even entered into the car dealership. You would assume a car dealership earns its money from selling the car. But in actual fact, what they wanted to do, Chris, was they wanted to use the car to sell you the finance. And when they sold you the finance, that's when it unlocked all of these huge commissions.
Okay, so many factors in play here, Chris, but what are the implications of all of this that's been uncovered?
The implications are yet to be revealed in some ways, because in very many ways, this is still a moving target. It's a developing story. For example, we've got a very important Supreme Court decision due out in April that will define whether, who, how any compensation might get out there to the millions of customers who are seeking it. Also, there's a Financial Conduct Authority update on the whole fiasco, and that is due in May. Now, the importance of what we're talking about when it comes to those two factors that are coming up is quite considerable, because at the Supreme Court, they won't just be looking at discretionary commissions, they'll be looking at all of them, including the ones that we've been revealing today. And the Financial Conduct Authority has been sent the very paperwork that we are talking about. So that potentially will be part of their findings and part of their update in May. Let's just talk about the other side, because every story, as we know in our business full well, every story has another side. And there has been an awful lot of highlighting of the customer's view of things. I can perfectly see why. But on the other side, we've got the industry, and the Financing and Leasing Association is the biggest professional body in that field. We spoke to Adrian Daly, who speaks for them. They feel that if there was any damage done to consumers, it was much smaller than has been imagined so far, and that he shouldn't be using words like, as we keep using, scandal. He'd be very angry to hear us say it. He says it's not appropriate.
Well, we don't accept it was a scandal, but we do accept there were some customers who would have been harmed a long time ago.
Well, isn't that a scandal? Isn't that a scandal that some were harmed? Isn't that enough of a scandal?
Well, if some are harmed, we accept that they will get their recompense. If consumer ever asked, we told them what the commission arrangements were and how much they cost.
But isn't the whole point that they shouldn't have to ask? It should have been declared.
Well, that wasn't the regulator's view. And the regulator's view for decades was disclose the existence of commission, and if a customer asks, tell them the amount of it. And that's what we've always done. Okay,
So they said they've stuck to the rules, essentially.
They're saying they stuck to the rules at the time. What makes this so complicated is that the rules seem to be changing. And of course, they changed in 2021. We've already talked about the fact that the Financial Conduct Authority banned those discretionary commissions back then. But we also had some court cases that seem to be suggesting that the onus on the car dealers was much higher than previously thought in terms of open declaration of what was going on.
Right.
So it is complicated, but there is that side of the story. And what it comes down to is that the industry doesn't think there'll be much compensation. He thinks millions of people are barking up the wrong tree.
Yeah, but millions of people who are barking up this alleged wrong tree where there is no scandal would say otherwise, and they'd like to know, well, if I am due some compensation, how could I possibly get it then?
Yeah. And the first thing is the simple, let's look at that time frame between 2007 and January 2021. Did you take out a vehicle loan? Car, van, motorbike, motorcycle, whatever kind of vehicle?
Yeah.
Did you take out finance for that? Do you feel that you were missold finance? If so, then you can complain to the lender initially. Bit of a pause, don't expect anything to happen overnight here because everything now is frozen until we get these various updates. So we've got the court case coming up in April, we've got the official update in May, and all of the lenders have been given now until December this year to respond to complaints. So you can get your complaint in, but don't expect a response, and certainly not any actual compensation for some time to come. But I suppose we are now reaching the final furlong of this bedraggled saga. It's kind of scooped up millions and millions of people. It's engaged a lot of attention. You start talking about something like this in the pub and people crane around because everybody's interested in what's being said. And a lot of people want to know, well, should we go with one of these claims firms? Because there are two ways to go if you want to complain and try and get compensation.
Well, that was going to be a question. How do you even go about it? Because it's complex even just talking about it with you, Chris, and you've been investigating this for a while now.
I have.
But, for me, I can't imagine just going through all this. Where to begin?
There are two routes that you can go down to get your complaint and start the process of compensation. First of all, you could use one of these claims firms. Yeah. But of course, they're going to take a slice of any potential compensation as their fee. I've looked at this in detail, and it goes from anywhere from 28% all the way through to 60%. So if you go down that route, be very careful to work out what you're getting involved in.
Yeah.
In their defense, the claims firms say, look, we are taking that money, but we're using our expertise to get the very best case for you, to get the information that you need and to get your claim to the right people. And if you use a free web service, because there are free toolkits out there online where you can register your complaint without having to pay any money, they are out there. So it's really every individual's choice which route they want to go down. But this is going to be huge for months and months to come. And I'm sure more and more people will start to engage in the process, and therefore the stakes get higher and higher. So when we get these big breakthrough moments that are coming up, like the court case in April, you can imagine the publicity there's going to be. When we have the official update in May again, and then in December, when lots and lots of people for the first time start to get individual responses to their complaints. We've got a whole timeline of interest and intrigue. We might have to do another podcast.
We might have to.
You never know.
I'm excited at the prospect already, Chris.
And whatever happens, what we can say for sure is 2025 is going to be the year where all of this is going to get dragged into public scrutiny. And a lot of it for the first time. And a lot of people are going to be very eagerly interested in what emerges.
And until we hit all those time points, I guess for people, what they can do is just get their ducks in a row, have a look at those agreements.
And of course, look out for the updates, which we will be putting on our television output, in our online services, because it will be complicated. We'll guide you through it. And hopefully, you'll be well equipped for whatever's coming down the line.
Let's hope so, Chris. Thank you so much. And just to let everyone know, for more of Chris's reporting on this and many more consumer issues, go to itv.com/news. Until our next quick briefing, thank you for joining us.